What if I told you guys that making money in the markets can be so fucking easy? Do you believe me? Now, how many times have you stared at the market, wondering why you keep losing while others seem to win effortlessly? Sounds familiar, right? So what if I told you that there's a proven method to dominate the US30 intraday right at the opening bell, a strategy so precise and so effective that it can transform chaos into cash flow in just 90 seconds. Maximum 90 minutes, which is still not a lot of time each day. Now in this video, I'm breaking down the exact blueprint that I've used to master the US30, from marking those critical highs and lows to catching the perfect entries. And here's the best part. No fluff, no gimmicks, just a razor-sharp plan that works. Backed by years of study and relentless backtesting. So stick around, because in these next 10 minutes I'll show you to maximize your wins, minimize your risk, and crush the market every single day. So are you ready to level up your game? Let's go, guys! Here are the exact rules on how to dominate the US30 intraday. 1. Use a 1 minute time frame and only focus on US30. Of course, because it's the best market to make huge amounts of money. Believe me, just take it from me. Only focus on that before you go on to something else. 2. Only trade from 9:30 a.m. till 11 a.m. Meaning New York time, of course, because we are only focusing on US30, which is opening when the New York Stock Exchange is opening. So that is opening at 9:30 a.m. in the morning New York time. So make sure you change your time zone, you change your trading view settings, etc. Make sure that you do that. 3. Mark the external and internal highs and lows before the opening. So before the market is opening, so you need to be at your chart at 9:10 or 9:15, something like that. So give yourself 50 minutes the time to analyze the chart, to see where the important zones are, where the highs and the lows, the internal and the external ones, and etc. So make sure you can do that before the market opens, so you don't feel any pressure or any stress. 4. Use the break of a fair value gap as your entry. If you don't know what a fair value gap is, we will explain this in the following videos, but for now, if you really want to know what it is and you don't know what it is, look it up. 5. Stop loss above, under the fair value gap and take profit at the next target high or low. So that's pretty simple. Just take the next internal or external high or low as your take profit area. Study and backtest each New York session opening to prepare yourself. Now this is a very important one, guys. Don't take anything from me, even if I know I'm talking the truth and I know that you are going to become really profitable by just following these steps. But you just can't take anything from anyone on the internet. You need to backtest it yourself. Go check out yourself how the market is reacting at the opening, and you will see it yourself. There is a lot of money to be made each and every week, each and every day. So let's fucking go, guys. Okay, guys, so let's keep it short and powerful. So what you are seeing right here is the US30 on a 1 minute time frame. So let's see what happened right here, guys. As you can see, all these gray or brown areas are actually the opening of the market, and we are looking here at the opening of the market on a 1 minute time frame. We see some wicks created right here at the opening of the market, pretty big wicks. So that's very important to note. Now, what do you need to do before the market opens is to analyze where the previous consolidation areas were and where the previous highs and lows were. So to keep this thing simple, I'm just going to go and mark the high right here before the opening, and then we have a low right here before the opening, which is or you could put it right there as you wish. So nothing special, guys. You just mark the high, you mark the low, And you can also mark out the consolidation areas, but to keep things simple right now, I'm not going to do that. So what did we see happening at the opening of the market? The market opened and we immediately created these wicks around this area where we have marked out our previous low. So you could have drawn it a little bit lower, and as you can see right here, it's almost perfect how the market reacted out of that zone. Now we did go under it, and that's the rule that we like to see. We like to see that the market is being manipulated, taking out a high or taking out a low. This can be an external high or low, or it can be an internal high or low. So in this case, it was more like an internal low, but that doesn't matter. It still works. So what did we see at the moment when this happened? We saw that there was also a fair value gap being created. So we have a mini fair value gap right there. We have another bearish fair value gap right here. So this is all on the 1 minute time frame, guys. So very important to note. So as you can see, we have a couple of bearish fair value gaps right there. Now, once we start to break those, that's our confirmation to look for an entry or to enter right away. So that's something that you need to decide for yourself, because each day is different. But right here, what did we see happening? We saw the breakout. So this was the first breakout, and then we had another. We came back actually to that same level, to that same low as where the market opened. And then again, we broke out to the upside. So both of the breakouts were valid. Now, the best breakout to take, of course, was the second one, because there after that we had this big push to the upside. Now, if you use your stop loss correctly, then you should be safe even on the first trade. So let's give an example of that. If we would have entered here right immediately when the candle broke out, we should have targeted for the high, and our stop loss should have been underneath the candle, which is right here. So as you can see, we just would have it's really to the fucking pip, we have reached our stop loss. Now, if you would have put your stop loss under the low, now that would have been a very large stop loss. So I don't like to do that. But then you would have been safe, and then you would have had a risk to reward of 1. So still something you could have done. I mean, it's like risk to reward 1 is not bad if you know that you are most of the time correct, and this is something like that is most of the time correct. I mean, these kinds of setups, I see them happening every fucking day, and that's where you want to make your money, because that's where the biggest moves are happening. So if you took the second trade now using our system, so right here we had the opening, we had the breakout candle closing above the bearish fair value gap. Now we can use a stop loss underneath this low right here, and we use a take profit at the high. So as you can see, this trade did pretty well, and here we had a risk to reward ratio of 2.8, which is pretty good. It's not bad. And there you have it, the exact strategy to dominate the US30 like a fucking pro, guys. Remember, it's not about luck, it's about preparation, precision and execution. If you found this valuable, make sure to smash that like button, subscribe and turn on notifications so you never miss game-changing strategies like this. But don't stop here. Success in trading comes from constant learning and backtesting. So drop a comment below and let me know your biggest takeaway or any questions you have, because I respond to every single one. So now it's your turn, of course, guys. Take what you've learned, hit the charts and make it all count. And I'll see you in the next video. Until then, trade smart and keep dominating the markets, guys. I'll see you in the next one.